So let's go read the message of the markets right now. Let's start off by taking a look at the Dow Index. That is trading out right now at 15,469. That's up 17 points. So kind of a meager open out here. And what we've seen here over the course of the last 4 trading sessions, take a look at these bars. I'm going to explode them up on my screen. If you are watching us on Tiger TV, thank you so much for doing that. If you're listening in on your mobile device at TFNN.mobi or radio station, thanks so much for doing that as well. Remember, you can always catch the live archive of this show on Channel 10, and you can watch the live stream so you can see these charts on your pads, on your smartphones by going to the homepage of TFNN.com. Over on the right-hand side, you'll see a button with 3 smartphone-type devices. Click on that. This show will stream live. And if we take a look at the last 4 trading sessions, really some narrow-banded bodies out here. Of course, that's after having a wide-ranging body on July 11th out here. So just pausing a bit, pausing in order to be able to make that next shot. That next shot in the Dow is getting up and testing the May 22nd high, 15,542.40. That's where it wants to make a run. We had a little bearish engulfing candle yesterday out here, so you had the bears peeking out, taking a stab at the market. But quite frankly, until you get below the body of this candle here from July 11th out there, you'd have to say, So you had the bears out yesterday, but quite frankly, the Dow still wants to test. Look, bullish or bearish, we want to see that test and what happens at the May 22nd high, 15,542. Now, you might ask, hey, what are those other squiggly lines on your chart, Steve, if you're taking a look at it? And I'm glad that you asked that question. That is the 9-day and 18-day exponential moving averages. The blue line is the 9-day. The 18-day is the red line out there. Now, when you have the 9-day cross over the blue line, it's above the blue line, it tells you that the market is trending higher. And if you take a look at coming off of the lows out here, back on November 16th, you can see the 9-day was below the 16, but was below the 18. Now, why would you have taken a long position on November 16th? Why would you have done that? Well, you'd be taking a look at other patterns that had formed out there. If we take a look at that other pattern, a leading indicator pattern, we can find a Gartley buy pattern out here. Here's your Gartley buy pattern, a 0.786 retracement. That's coming off of November 16th as the Dow was making a move down to the 0.786 retracement level. It was also, if I blow this up here, was making a key reversal session. So you had a bullish engulfing and a key reversal session. You had the A to B equals CD down. So you had everything. If you're using leading indicators, that would say, okay, you could take the trade. You didn't necessarily have to take that trade that day. You could have taken it the following session. And take a look at this 4-candle pattern out here. There's a reversal pattern called the 3-river evening and morning star. It can take more than 3 candles. This is what I call the hurricane pattern. This is the University of Miami hurricane pattern just simply because of their logo out there. And that is one of the most bullish patterns that we have seen. In fact, made the same bullish signal back in March of 2009. It's made it a few different times at significant bottoms ever since then. November 16th now proving to also be a significant bottom. You didn't necessarily have to, if you didn't know how to draw leading indicator patterns, or you didn't subscribe to a newsletter service where they looked at that on a continuous basis for you, you could have taken a look at just simply the 9-day moving above or below the 18-day. Now, I've done all kinds of back testing to see, is it as simple as that? If you back test it, can you just be long and short when you have the crossovers? And the answer is no, it doesn't really work out that way. But when you are in a trade, and if you were short a trade, and you got to the trading session of December 5th, 2012, and you were short when you had the 9-day crossing over the 18, you might want to rethink that strategy out there. If we take a look at the 9 and the 18-day, they really help you to understand the momentum inside a market out here. And we've only seen a dip below inside the Dow. This is what we're looking at, which came back here to June 12th of 2013. Now, it happened to be another leading indicator when the market actually made its low on June 24th. There were a couple of them. There was an A to B equals CD down. That looks like this. That would be coming off of the swing point high here from May 22nd. That's your high. Your low, your B point on this is going to be your June 6th low. Your C point is going to be the high that came in on June 18th. You can see a 1-to-1 A to B equals CD that had formed out there. Also, you've got the trend line. If you just take a look at the trend line coming off of the November 16th level, and your next touch point being December 31st, price moved right down into a trend line. So a diagonal form of support in this case out here. So that was another pattern that was completing. And what we have seen here now, ever since the trading session of July 8th, we saw the 9-day move back above the move back above the 18-day. So from a trending standpoint, the trend is bullish. You're up near a swing point. Yes, you had some bears show up in the marketplace here yesterday, but that bearish candlestick is being worked off here today, and we've got these small body candles. It says the market is absolutely tired. No question. And what does that mean? That means we're likely to see a spike at some point in time here above the 15 or to the 15,542.40 level. If you get a close below that, that might be the signal that the market is getting ready to make a retracement. Retracement, pullback, whatever it does. We won't know just how deep anything will go until we play things one day at a time and take a look at volume and so forth. What we do know that we do have, if we switch over to the Dow Diamonds out here, what we know is we've got volume towards that June 24th area. If you take a look at the volume here on the trading session of June 20th, 14 million shares to the downside. On the next candle, June 21st, 11 million shares. As the low is being made on June 24th, you've got 14 million shares. Has that low been tested? No, it has not. Take a look at these bodies out here on the way up and take a look at volume. A couple days ago, 2.7 million shares. You know, it's summertime, but are you kidding me? 2.7 million shares to the upside on July 15th, and to the downside, we had 14 million shares. How about take a look at yesterday? 3.5 million shares. How about back here? You did have 6 million shares or 5.8 million shares finally on July 11th, but that, folks, is really going against 13 million shares from May 22nd. So if you do get a move, it would be a 1 to 1.272 inside the diamonds, up above 155.14 and a close back below that area. That would be your failure on price and volume. That would set up a normal retracement. A normal retracement, shy of moving back with significant volume, would take you to about the level here. Let me just try to move this off to the side. Probably the 0.382 level takes you right down into that gap area from July 8th at 151.35. 148.99-ish would be game, and really what that means is just coming back and testing the swing point at least from July 3rd. That's where your next release of information would come from. Of course, on July 3rd, you're going to have to go ahead and adjust the volume there because that was a shortened trading session and a holiday, and that only has 2.6 million shares. But we'll cross things one moment at a timeout here. But as you can see, just simply utilizing a number of different techniques out there, and I'd love to be able to teach you those techniques. In fact, if you'd like to learn those techniques, go test drive Mastering Probability. That's my newsletter service. You can do that for 30 days, unconditional money-back guarantee, and it includes 30 to 40 hours worth of educational videos that come with that. So it's a great time to do that. You can spend, an hour a day going through a video, and I guarantee you that you will learn things, as well as if you got questions, you just simply give me a call or you send me an email. That's steve@tfnn.com. We did have some folks that had sent me some emails. They wanted to take a look at a couple of different potential trades out here. One was currency-based. The ticker symbol on this is YCS. YCS is the ultra-short for the yen out here, a U.S. dollar currency pair. So let's actually go rip apart the U.S. dollar Japanese yen currency pair. We got the daily chart out here first. Now, the daily chart, we take a look at what it has done thus far. If you come off of the high, it was May 22nd. May 22nd's high in the yen was 103.72, and come all the way down to the swing point low, which was June 13th out here. That price level is 93.77. What we can see is that the yen here has made a 0.786 retracement. So it got up to, and that level was 101.59. It actually got up to 101.52. How do you like that? Now, when it got up there, if we take a look at this, now this is kind of interesting because when we were taking a look at that Dow chart at the bottom, when we were taking a look at November 16th, remember there's a 4-candle pattern that we took a look at out there that I called the hurricane pattern? Well, this here has happened now as it made that 0.786 retracement. So it is very possible that what we're seeing unfold here inside the U.S. dollar Japanese yen is a setup of an A to B equals CD down. You just have to be very careful about this pattern. Now, what's cool about this pattern is we have really identified on the chart where the level of resistance is, and it's going to be the high of July 8th. And any close above that says that you've got a nice, because you've taken out a strong resistance area, you've got a nice momentum move to the upside. Now, the momentum move you would use when you take a look at currencies, anything that you trade out here, the momentum move takes you all the way back into the swing point of May 22nd out here. But this is the nice thing about this little candle formation, this 4-candle formation out here, is it has defined for us really great areas of resistance. And that is so helpful in trading because when you get above those areas, old resistance will become new support. Where is it? we should expect the U.S. dollar, Japanese yen to pull back to. Well, certainly the 0.382 level, it's already hit that. It did that in a couple of trading sessions, and most likely what we're going to see here is an A to B equals CD down, and maybe the next actual Gertley buy pattern that would form. And inside the U.S. dollar, Japanese yen, that would take you down to about the level of 90, looks like about 96.73 or so, your 0.618 retracement, and it may be about a 1.618 expansion of your B to C swing point. 877-927-6648. Dow is up 27. We'll be right back, folks.
With over 3 decades of commodity trading experience, Andy Hecht has developed a system that combines both technicals and fundamentals. He calls this approach Technomental, and now you can put it to work for yourself with his brand new service, the Technomental Commodity Report. In this weekly newsletter, which comes out each Thursday morning, Andy gives you his analysis of the market price direction bias using fundamentals, and then specific trade recommendations including entry and exit points using technicals. The recommendations in the newsletter are always based on stocks and ETFs, so a futures account is not required, and Andy will often use options in the recommendations as well. Andy will tell you where to get in, where to get out, and he'll outline the risk-reward profile for all recommendations. To get your month-long free trial to the Technomental Commodity Report by Andy Hecht while locking in the low introductory rate, visit the front page of TFNN.com today.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk, charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Now, the question before we went to break, because the email came in and the trade was, where to enter on the YCS. Now, the YCS is the ProShares Ultra Short ETF for the yen, and it's so hard to play these ETFs from a currency standpoint because you got currency fluctuations that are going to be taking place 24 hours a day. Certainly at 3 a.m. when you've got London really coming online, you can see some big currency fluctuations out there. And if you're inside the YCS, you're stuck. You're basically stuck out here. But to answer the question, it looks to me like the best possible trade setup would be right now, the formation of the next Gartley buy. And inside the YCS, the way that you do it, you just simply come down to the swing point low here from June 13th, that price level 57.60, go all the way up to the high that was put in here, and the high July 9th, or the high, let's see, you had 66.71 on July 5th, and you were at 66.67. So July 9th is our high out there. Now what you want to do is you want to mark the 0.618 retracement level. You can see how the YCS made it all the way down to the 0.382. Normal move. Did that here on July 11th. It's got to 63.17. By the way, 63.17 was your 0.382 level. Now the market here just simply moves sideways, so that could set up our A to B equals CD down. The 0.618 level is where it is that you would be looking at. Interestingly enough, inside the YCS, you had a high. Now in the currency market, we don't have volumes out here, and I wouldn't necessarily pay too much attention to the volume inside this ETF structure, but interestingly enough, you did have a decent volume day on June 19th out there. That really sets up, if you take a look at your expansions of swing points right now, your B to C would just be the July 11th low to the high out here 2 days later on July 15th, and your 1.618 expansion is about 61.97. But I would say more likely I would be looking at the range of 61.04 to 60.03. At 60.03, you're at a 2.618 expansion. You're right in between the 618 and 786 area, and it looks to me like right about. So I would say the price range that you'd be looking at to potentially enter a trade here would be 59.53 to 61.04. But all of this has to be based on patterns that are going on inside the daily chart, because you would be really trading the YCS from a daily, not an intraday. I can't recommend trading the ETF structure here for intraday trading of the currency pairs. You'd be better off just looking someplace else. The movements can be too wild out there, and I really think on the YCS you've got to be taking a look at a longer-term trade out here, and that means you come back and you take a look at the U.S. dollar, Japanese yen, and really be paying attention to the patterns that are setting up here. If, in fact, price moves down in that 96-ish area, 96.70 or so area, 95 and change, what you want to do is you want to make sure that you've got a reversal signal at the time that you would enter into the trade. And then if this pattern here were actually to go ahead and set up, then what this would be potentially doing is setting up an A to B equals CD up. That would really take you right into the resistance level of the highs out here back from May 22nd. So that was on the first one. Out here, that was the YCS. Let's go take a look at, let's see, where's the earnings tab here on my sheet here. The ticker symbol here is SQM. That's what we're going to put up. That was the next request that came in, and that is it's a Spanish stock, it looks like, and I would butcher the name, and so I'm not going to do that. I absolutely won't do that. Right now it's trading out at 38.66, and I don't really need to know what this equity is in order to be able to give some advice on it, bullish, bearish, or what have you. So let's take a look at it. And let me get everything off my screen here just for a moment. Now, what we can see here is this thing has been in a very significant downtrend. Its most recent trend, you can say, starting here with this high volume high, which took place on September 21st. So at some point in time, that high on September 21st, which is up at the 65.28 to 63.38 level, at some point in time, that high should be tested. You got a nice high volume high on the daily basis. The question is when. If we take a look at it ever since that high, right now it's trading at 38.66. It's out towards its session lows. What we have not seen on this equity, well, we've seen one sign of strength out here. And that one sign of strength took place on June 28th out there. It had 2 million shares to the upside. And that was a nice sign of strength because that 2 million shares was going into 1.1 million shares to the downside. But it didn't last very long, and it continued to move lower. Out here right now, you've got no bullish reversal signals. And I'm assuming here that the question was, where to get in. And what you'd really like to see is another sign of strength, or a couple signs of strength, because we saw a little bit of a sign of weakness a couple days ago on July 11th, 948,000 shares to the downside out here. So I'm going to put this on a weekly chart just to get a better idea, a better view maybe of what it is doing here on a weekly chart. And on a weekly chart, it's trying to get back into the set of swing points, this little cluster out here, back into the 2010 time frame. So it looks to me like maybe your trade opportunity and release of information comes when this equity moves back into about the 35 to 32 range, back into the May 2010 time frame. 877-927-6648. Right now we got the Dow up 32, S&P's up 6.5. We'll be right back.
With the stock market flirting with all-time highs and volatility back, now is the perfect time for a 2-week free trial to Market Insights. On Monday, June 24th, Tom O'Brien closed out all 5 open positions in his daily newsletter, Market Insights, with all trades being profitable and ranging from a 2.23% gain all the way to more than an 11% gain in just one position for an incredible 32.7% profit combined between the 5 trades. Let Tom O'Brien's years of market experience work for you. If you'd like to see for yourself what kind of trading newsletter Tom O'Brien delivers to his clients each morning, then now is a perfect time to sign up for a 2-week free trial to his daily newsletter, Market Insights. In a volatile market like we currently have, the potential for fast market moves like we've seen recently is a trader's dream. So don't wait any longer. Sign up for your 2-week free trial to Market Insights today at the front page of TFNN.com.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can't use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by TFNN. test drive of the newsletters for free at TFNN.com.
Welcome back, folks. I want to go back to that SQM chart here just for a moment. I've got the weekly chart up on my screen, and if you just simply used as an identifier for reversal patterns, just simply candlesticks. If you didn't understand anything but that, you could save and you could make so much money. In the case here of this equity, coming in off of that high. Now, on the weekly chart, it also has a high volume high out here. Back from September 21st, 6 million shares up there. So, at some point in time, it's going to go ahead and revisit that. The question is going to be when. But if you take a look at here, this most recent trend, for the last couple of months, March 15th, take a look at all these red candles here. You got a little hammer candle that actually formed here on the May 3rd on a weekly basis. That was your bullish candle once you got to close below that. And you can see that hammer candle also was forming as was coming against this bullish engulfing candle from the week of October 7th, 2011 out there. But right now what we can see here is there are no bullish reversal signs whatsoever on the weekly chart. And that says that what it wants to do, wants to go ahead and come all the way down into the swing points. And that swing point is the week of May 21st. The low is 30.98 and the high is 35.11 out there. Short of some other bullish reversal signal in this equity, it will go ahead and drift down to that area. Now, right now the Dow's up 36 points. Let's peek around at some of the core stocks in the marketplace here. Let's start off by taking a look at ExxonMobil and see what ExxonMobil is doing. Right now, ExxonMobil is peeking its head above a nice $7 trading range. It's been in a sideways trading range going all the way back to July of 2012. So a one-year trading range, just like the oil contract has been in. And right now, it's peeking its head above it. Now, it came into the top of this range here with volume. You can see a red line going across the bottom of my screen. This will take you all the way back into the swing point here of October 19, 2012. Now, that was a big bearish engulfing candle that formed out here, and that volume was 15 million shares. The first time up there, it was with 19 million shares. So that was saying we're going to be back up here, and we're going to test this again. And that time that we're going to be back up here happened to be a few trading sessions ago, and that was on July 11th. So the top of this range, and that happened to be 16.1 million shares. So you've got volume that is really trying to tag and break through the $7 trading range out here. Now, it's really important to be paying attention to ExxonMobil. Number one, you got a nice trade out here. You got good dividends. You got a $7 trading range. If it does break above this level, it gives you a nice reward to risk because your stop is going to be a close really back inside the trading range. Or what I would use would be I would stop out of a trade if I were going to take a trade with a close probably below 92.72. That would probably be somewhere right around there where my stop would be. Of course, I'd want to know what the average true range of ExxonMobil is on a daily basis. I'm not saying take the trade now. I'm saying what ExxonMobil is actually trying to do here today is to break above a $7 trading range. And if it does break above this area, it says that what ExxonMobil has on its plate for us is $100. And $100 will take it all the way back to the highs in 2008. It was up at 94.59. So to get above that level, of course, that would be an area of resistance that it would run into. So as a breakout pattern goes, let me put this on a longer-term chart out here, you'd prefer to not see resistance so nearby out here, and that has been a significant resistance. So now when you put the monthly chart for ExxonMobil up on the screen, you can see this has been significant resistance, but of course it gets above $96.12, and it'll be off to the races to at least finish that pattern out here. But on the monthly chart, candle looks pretty darn good as it approaches that area. So right now on the daily chart, it is trying to break out above a $7 trading range out here, and it's doing it with some pretty decent volume. Now, in the case of ExxonMobil, I think it still may be the number one weighting structure inside the S&P, and I know that it's the number one weighting structure inside the energy sector, the XLE out there, and so that helps you to understand what's going on. So that's on one of our core stocks that we want to be paying attention to and read a signal. Of course, another core stock would be, I would say, would be IBM. If we go take a look, so here's the tale of two stories. You got ExxonMobil trying to break out to its highs out here, and you've got IBM basically doing nothing other than getting back into an area of resistance where it most recently broke down with 10 million shares to the downside. That breakout area, breakdown area being June 27, 3.5 million shares on that gap down candle, and it got up there on July 8th with 2.9 million shares. Today volume on this little dredge higher here inside IBM, only 980,000 shares. Remember, that's going to 980,000. How about that? Yeah, 980,000 shares. That's going against 10 million shares to the downside, and we've been trading for over an hour. So IBM is not confirming, and IBM is the number one weighting inside the Dow. Now, IBM itself has been trading in a consolidation range. This consolidation range goes back to January of 2012. And this is a nice trading range. I would say IBM may be a nice buy as it comes back and it tests that original breakout area, which is going to be January 19th, somewhere right around the 182 mark. If it can come back on less than 12 million shares there, it'd be nice. The last time, the only time that it's come down and tested that area was on 5 million shares on July 12th, 2012 out there. So if IBM can get back and test that level, you'd like to see it ideally do it on less than 5 million shares. That sets up a nice trading range, a nice consolidation range, because you're going from what, about 182 to 211. So you've got a nice, what does that make it? 29-point trading range inside IBM. I'd take that all day long. And what's nice about that is if you took this trade here, assume it comes back with the right volume, you get a close below, I would say here a close below 177 on that trade, and you're definitely to the wrong side. In fact, the consolidation will then be that number of points to the downside versus to the upside. But here you can play IBM in a trading range. Right now does not look like the time that I would be stepping in on that trade. Let's go take a look at a couple of other core holdings out here, see what might be going on. Let's take a look at Microsoft. Let's go see what Microsoft here is doing today. It's got a little bearish engulfing candle that it is forming. Let's put this on a longer-term trade cycle. Let's take a look at the weekly inside Microsoft. Microsoft here getting back to its highs, trying to get back and test the high from November of 2007, 37.50 on the weekly chart. I don't see anything standing in its way, really, of doing that other than, it reversed off here. Hasn't tested it. The trading session from December 28th of 2007. Now, volume-wise up there, of course, that's going to be a shortened trading volume. That was 126 million shares. Last week, you were up with 176 million shares. It's the summertime, so it's got the volume to get up here, and it wants to test the price level of 37.50 before it gives us any information. That is on Microsoft on a weekly chart. Let's take a look at one or two others inside this. How about Simon Property Group? Take a look at Simon Property Group from a real estate standpoint. I believe Simon Property Group is also a part of the XLF out there. And if you come off of the March 09 lows and just take a look at the trend line of Simon Property Group, it has come down and it has tested that trend line. So Simon Property Group, quite frankly, offers you a potential trading opportunity here because it's come back into an area of support, just simply diagonal support. That level has held, and it's trading right down near that area. The volume here, this is a weekly chart that we're taking a look at. Yeah, it's made a move off of the highs back in May of 2000, just recently here, the May 22nd high, I'm sure was a key reversal day because the weekly, it is a key reversal session. But right now, that level of support has held out here. That is on Simon Property Group. Let's see, what other nuggets do we have inside of this? Take a look here at Google. If we take a look at Google, it is traveling out right now at 923. This here is the Cinderella story. Google is up over a resistance area. A little shooting star candle here at 920.60. It's at 923.39. So it's up over a resistance area. We'll see if that acts as support. Didn't yesterday. Had a nice little bearish reversal signal yesterday. But, of course, that is being worked off here as we speak today. I'm going to go peek in on that little battle going on that we were looking at on the 30-minute chart for the ES Mini. Let's see, where did I put that chart out here? Where is the ES? It wasn't on that one. Maybe it was this one right here. Yeah, it's this one right here. So what we saw taking place during this half-hour session here, again, we're seeing a attack of that resistance line. The bears are able to defend that position. It shows you just how strong that area is, which is right around the 1679 level. So we've got a battle going on. It's right here at that 1679 mark. That area has held, and that means that if you see on a 30-minute chart a close above 1679.50, it's going to tell you that the bulls were able to take over that position. 1679.50 will then become a area of support. What's the support area right now in this little sideways move? Well, it looks to be that 200-period exponential moving average. Yesterday, price moved right down into it at 1:30 in the afternoon. Angie in the den called. I just happened to look over to my screen, and she said, the market is going to reverse now. Now, I don't know what she was using back then or what pattern she was using, but I can tell you that price had moved right down, tagged that 200-period exponential moving average, and bounced off it. Now, was not much of a bounce, and in the overnight session here, at about 6 a.m. this morning, we saw a slight move down below that level, and it didn't take long for it to get back above there. So that 200-period exponential moving average right now acting as a support area, and that is using the 30-minute chart for the ES Mini. Let's take a look here at some of these stocks out with numbers both before the bell this morning as well as yesterday after the bell. Let's take a look here at Bank of America. Let's go see what Bank of America is doing. Up over its highs out here. So far, trading out at 14.14. Volume behind this move here, 80 million shares going against the swing point that had 159 million shares on May 31st. So that's a nice little breakout there inside Bank of America. Of course, this is a not the best of looking charts out here when you consider how it came off of its highs, but it has been in a nice little trend off of the July 2012 time frame, so a nice little uptrend off of that, and it's taking out a swing point here with volume says it wants higher price. Let's put a little longer-term time frame here on a Bank of America. And let's take a look at its most recent A to B equals CD pattern. That would be your A point coming off of the lows here on December 23rd, 2011. That price, $4.92. B point on this is $10.10 on March 23rd, and the retracement here was back on the May 25th time frame. Those volume bars look a little suspect to me on my chart here. Let me see if that. Yeah, I don't. There's something wrong with the data inside those volume bars, so we're going to turn that off. And what we can see here right now looks like what Bank of America wants to do is get up into the $15 range, and $15 is going to take it into the swing point here from January 14th. The swing point low, 1409, the high, 1503. A million shares out there. Has not, and it's into that swing point right now. Let's go ahead and put the line across the chart here. Let's put that in red. So it is tagged that level. Again, I don't have the volume, consistent volume that we're going to be able to be really paying attention to out here. But I got a million shares. Actually, got 1 billion shares for the week of January 14th, and through yesterday you had 236 million shares. Last week, 534. So it's approaching that area with light volume. Looks like maybe the volume on my bars is correct, and the bottom of the screen was incorrect out there. Maybe. I'm just going to take a look at this. I won't waste your time on it. In any event, that's where Bank of America is headed to. It's into that swing point, and if it closes inside 1409 to trading at 1408, it'll want to go tag that 1531 level. Let's take a look here at, let's see, what else? Yahoo. Let's go see what Yahoo, that's trading higher. Looks like it also has good volume behind its move. It is taking out a most recent swing point from May 15th. That high is $27.68. That has 21 million shares out there, and it's up over that with already 29 million shares today. So Yahoo on its move up, and let's go put a longer-term chart on Yahoo and see where that looks like it wants to head to. Yahoo right now is taking on, looks like it really would probably head up into this swing point level here from November of 2007. So it's after its highs. It's going to have to take on the bottom of that swing point. And that level, and I'm looking at the area, folks, of November 2nd, 2007, the low there, 29.64. But that is where it is headed to. May have a little bit of turbulence and resistance as it gets up into this 29.73 range, but it's trading at 28.62 right now no real A to B equals CD. If we'd have to use this as the swing point here. The week of May 17th, that has 85 million shares, but it should have no problem dealing with that this week and getting up over that area, because today so far, if I go back to the daily chart on this, it's already done 30 million shares for the day. So Yahoo on its way northward. Let's go to John in Concord, New Hampshire. John, thanks for calling. Thanks for holding. How are you this morning?
Very well, Steve. Thank you.
My pleasure. You want to take a look at the GDX?
Yeah, I got out of it last late winter, and I'm looking at where it is and wondering, should I get back in? And you do a much better job than I do at looking at it.
Hey, what's the time frame that you're looking at from a trading standpoint with regard? And the GDX, folks, that's the Gold Miner Vectors Trust out there, the ETF for it. What would be your time frame for getting into that trade? Is it a intermediate term, long term? Tell me what your trading style is.
I would say intermediate, not short.
Not short. Okay. So what I like about this trade right here. We take a look at the GDX. Number one, it's got this nice bar from June 28th out there, a hammer candle. John, can I ask you to stay on through the break?
Absolutely.
Okay, we come back. We're going to go back up to Concord. We're going to speak with John about the GDX, take a look at, what does the intermediate term outlook for the GDX look like. Our call number is 877-927-6648. We'll be right back, folks.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Nowhere, spelled N-O-W-H-E-R-E. At one point, we've all been there, whether it be our health, career, or our finances. Some might be there right now. So where are you when it comes to your trading and investing? Better yet, where would you like to be? The good news, I can take you from nowhere to now here right now. Same letters, N-O-W-H-E-R-E, just a totally different emphasis and focus. Hi, I'm Steve Rhodes with TFNN, and on July 25th at 6:30 p.m., I'm going to share with you a trading strategy that I began on May 10th when the S&P was at 1627 and closed at the same price 8 weeks later. That's right, the S&P went nowhere versus a trading strategy that produced a 100% hypothetical return in that same period of time, and it's now here for you. Subscribers to my daily newsletter service, Mastering Probability, have free access to this exciting live workshop. The trend is your friend. All the details are on the homepage of TFNN.com. Decisions shape your destiny, and your trading destiny is now here for you.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. A kind of a flat-ish market out here. The Dow's up 8. The S&P is up 4. Russell 2000 up is really leading the charge on the way up nearly 5 points. But nice market breadth out here. You got 1,117 net advancing issues in the New York Stock Exchange. So it's neck and neck here with the Russell 2000. We're going to go back out to Concord, to John, Concord, New Hampshire, to John. We're taking a look at the GDX. So from an intermediate-term trading standpoint, John, what I like is the hammer candle that formed on June 28th. Now, it's a high-volume bar nonetheless. 231 million shares back there. The low has not been tested, but oftentimes on a hammer candle, the lows will not be tested. It's a nice trade when they are tested. And the GDX came back and tested it on lighter volume on July 12th. It was 126 million shares going against 231,000 shares. And then you had a nice little sign of strength. Let me just refresh my chart here real quickly. And it's the weekly chart that I'm looking at inside the GDX. So, it's come back. It pulled back into that area. It's back above that hammer candle. Your stop, if you're going to take a look at a trade, would just simply be a close below 22.21. So from an intra-session standpoint, you'd put it below that level because you wouldn't necessarily want to be stopped out. It's traded at 25.28 right now. But if you did get a close below 22.21, that would say, okay, the long side was too early. Now, if we just take a look at just kind of a normal, the most conservative type bounce that you could see inside the GDX so you can do your reward to risk again. I'm on a monthly chart here. To me, it would be the 0.382 retracement. That would be a dead cat bounce, and so your first target area would be $34.83. More likely, on the intermediate time frame, you'd be looking at $42.63. Now, that's just simply coming off of this last leg down from September 21st. And that's a really good one to be paying attention to, because if we go take a look at the gold contract itself out here, we'll see a significant high was formed in gold on the September 21st time frame as well. Right back, actually, in this case here was October the 4th. So it's close enough for me, October 4th, 2012. So that's how I would take a look at it. Now, if I go back to the GDX and we take a look at its action on a daily chart out here, we're going to see a nice sign of strength that came into it yesterday. So we saw a nice sign of strength, volume off of the bottom on June 28th. That was very bullish. We see a little bit of a hammer candle here that formed at the lows of July 5th out here. And that had some volume behind that move. We saw a nice little sign of strength in this on July 11th with 38 million shares. Yesterday, 35 million shares. Today's pullback, 12 million shares. So you got a little bit of volume in it, but right around here is the is the time. If you're looking to get into the GDX, I would say right around here is the time to get in or try to scale in. Maybe you take maybe have a trade here at right where we're at right now, or 24.55 or 23.65, somewhere in there. But it's a good, in my opinion, it's a good reward to risk trade. Even now.
I appreciate your confirmation.
No problem. Anything else that you were looking at that you wanted me to take with regard to this trade? Is there anything specific or anything else that you might have been looking at that you'd want me to look at for you?
No, but thanks for your help.
Okay, no problem. Thanks so much for calling.
Have a
Folks,
good
it is You bet. It is Wonderful Wednesday out here, and on Wonderful Wednesdays, we have a beautiful lineup for you, because following this show, we got our man Basil Chapman. After Basil, we go up to Larry Pesavento. Then we've got Daryl Martin, David White. On Wednesdays, I think Wednesdays we got a free hour, and then it's the Tom O'Brien Show from 4 to 6. So, folks, I want you to have a great Wednesday out there. Be safe in your trading, and always remember, the way you do anything, it is the way you do everything. Become a pioneer of your future versus a prisoner of your past. Have a great day, folks. I look forward to seeing you in the morning. Take care now.